Is it a false signal? It's not a false signal on precious metals. That said, I think there will be a correction in gold and silver prices sometime within the next month or so. Could be tomorrow, I don't know. I'm not a trader. But you should be a long-term holder of gold and silver. Don't try and trade it. If you have spare cash on the dips, buy more. But don't try and trade it. Why don't I read out some notes that I made immediately after it without talking to anybody and without reading anything that anybody's written?
Okay.
So these, therefore, are my personal views, and they should be taken as such. 1. America dominates the world politically, economically, and militarily. Thus, if you are with us, you should invest in America and be supported by us. And if you are not with us, we will destroy you financially or by force. The first part of the speech were prepared, but in the middle, he was rambling about how great America is, how past governments destroyed America, and how I, Donald Trump, have changed around the sinking ship into an embodiment of success in less than 1 year. Then he went on to talk about how household incomes are rising, and my immediate comment was, tell that to 90% of households. Then he went on to talk about the stock market is booming, planned CapEx is 18 trillion, the highest on record. But my comment was, much of this planned investment is attributable to data centers and AI, and how much of that investment will disappear.
Rising household incomes and a booming stock market were presented as proof of success. But broad-based prosperity remains questionable, with most households still struggling against high living costs. Record capital expenditure plans, often cited near $18 trillion, sound impressive, yet much of this investment is concentrated in AI infrastructure and data centers. These projects are highly sensitive to financing costs and expectations. If the AI investment cycle slows or disappoints, large portions of planned spending may never materialize. Foreign investors, meanwhile, appear opportunistic, engaged but cautious and ready to retreat if conditions shift.
When the expected A1 bubble bursts sometime this year. And how about the foreign investment? Foreigners are playing the game with Trump, so you must understand that much of that investment won't materialize. Then he went on to talk about inflation, how he'd beaten inflation, and how gasoline prices had fallen so sharply. But my comment, of course, is you're seeing the trough of inflation now, and with fiscal and monetary stimulus coming in and food and energy prices likely to rise, we will see higher inflation significantly in this time next year and much higher 10-year treasuries. Then, of course, he talked about all these new factories going to be built in America. But my comment is there is not the skilled labor to satisfy that capacity. And in fact, only recently, Ford's CEO said that he had vacancies for skilled labor for months but cannot fill them. There was a comment about the attack on Venezuela that really struck me when he said that we had this ability to silence all the missile defense systems that Venezuela had acquired from China and Russia. So my immediate thought was, if that is correct, then is this what he is going to use if he attacks Iran?
Claims that inflation has been defeated rest on fragile ground. What we are likely seeing is a temporary trough, not a lasting victory. With fiscal stimulus, defense spending, and election-driven policies ahead, price pressures, especially in food and energy, are poised to return. Bond markets are already signaling concern. The United States faces massive refinancing needs, making lower long-term yields politically essential. Short-term relief may arrive, but structural forces point toward higher rates ahead. In a heavily indebted system, rising yields amplify risk across equities, housing, and government finances simultaneously.
For me, that was almost the most important point that came out. Then he chatted about his good friends Putin and Xi. Putin wants peace in the Ukraine, he said. But Putin wants peace only on his terms that secures the future security of Russia, and not a peace settlement for the sake of peace. And Xi knows also that despite the rhetoric from Washington, that in reality, Washington wants to crimp China's growth. And why then did America sell $11 billion of offensive military equipment to Taiwan just recently? So I'll come on to later on our chat about how China is now taken off the gloves. On Greenland, as I might have said in our last podcast, that a deal will be done whereby America will buy Greenland and buy the inhabitants by giving them X $100,000 each. They're only 57.
Announcements of new factories and domestic reshoring collide with a practical constraint: skilled labor shortages. Major manufacturers continue to report unfilled positions lasting months. Industrial capacity cannot expand without people to run it. Meanwhile, a revealing comment about the ability to neutralize foreign missile defense systems raised geopolitical stakes. If such capabilities exist, they shape deterrence far beyond smaller states, potentially extending to conflicts involving Iran or other strategic rivals. This moment, more than economic claims, hinted at how military leverage underpins America's broader global strategy.
Well, quite clearly that Trump needs 10-year plus Treasury yields to fall because of the massive refinancing that they've got to do. On our work, we've got, by the middle of this year, 10-year treasuries yielding down to just below 3%. After that, the yields start rising. By the end of the year, we'll probably see 5%, 5 plus, or 5.5%. And then in 2027, we'll probably see 10-year yields 6 to 8%, and in 2028 in double-digit figures. We know what that means in a highly indebted system. So for equity markets, it's going to be very volatile. Probably we will see there will be a big correction sometime between now and the middle of the year. then we will see, with all the stimulus that Trump needs for his midterm elections, etc., we will see, on our base case, markets, whether they be base metals like copper or the US equity markets, doubling from their trough, which we've seen by middle of this year.
Talk of peace with Russia underscored a hard truth. Any settlement would prioritize Russian security, not abstract ideals. At the same time, Washington's actions toward China tell a different story. Efforts to slow China's growth continue, even as billions in advanced weaponry flow to Taiwan. Strategic competition is intensifying from technology to territory. Greenland enters the conversation as a symbol of Arctic resources and geopolitical leverage. In a fragmented world, economic decisions increasingly reflect security concerns, blurring the line between trade, diplomacy, and power projection.
We're currently around 13,000. There is a risk, just as there is a risk for equity markets to have one more push upwards. So we could see copper going to 13.5 to 14,000. Then by the end of this year, falling to under 7,000, because the copper market is in surplus, and because in America at the end of last year, there was a surplus of 900,000 tons. Physical consumption remains weak. There's a lot of chatter, of course, that with data centers, that there will be a massive increase in consumption, but the markets are ignoring the fact that substitution, particularly at these prices, is taking their toll on physical copper demand. It's primarily coming from fiber optic cables, which are not only being used to go from the transformers into the racks, but are now being used in the racks themselves, because data center guys now want speed, and fiber optics gives them speed, whereas copper does not.
Markets are entering a volatile phase. A sharp correction is likely before stimulus and election dynamics fuel another surge. Copper illustrates the risk. Prices may spike again, but structural surpluses, weak physical demand, and substitution, especially fiber optics replacing copper in data centers, limit long-term upside. Optimistic forecasts for 2030 and beyond ignore the path required to reach them. Recessions reset demand. Precious metals stand apart. Short-term corrections are likely, but gold and silver remain long-term anchors. The lesson is simple. Respect cycles, avoid chasing peaks, and don't be last on the floor.
Remember the chief economist of a major mining company giving an industry speech, no outsiders, just producers and fabricators, and a few guys like me, saying that it's all very well having these optimistic consumption forecasts for 2030, 2040, or 2050, but you've got to get from here to there. And in a very fragmented and volatile world, if you back those future numbers, you could run into huge trouble, because the world might, by 2030, will be in recession. What does that mean for copper prices? So, I'm not going to tell you what copper prices we've got post 2028, but they're horrible. Like everything. What is the equity markets going to be doing then? A shadow of these current numbers. The world will go into a deep recession.
2028?
Post-2028. So, I mean, for your listeners, play the cycles. As I keep saying, don't be the last guy on the dance floor. So
Right.
have an investment focus and not a trading focus. Is it a false signal? It's not a false signal on precious metals. That said, I think there will be a correction in gold and silver prices sometime within the next month or so. Could be tomorrow, I don't know. I'm not a trader. But you should be a long-term holder of gold and silver. Don't try and trade it. If you have spare cash on the dips, buy more. But don't try and trade it.